Oh, here we go. There we go. There we go. Boom. Let's see what we got in the chat. What up, Joe? What up? What up? Let's see who we got on the call. I didn't even check. I see that's Terry. I don't know if that's Steve. What's up, family? Mr. Brian, Cal. Thank you guys for plugging in on tonight. Yeah, so anybody have any questions or concerns about anything? Last week was a phenomenal trading week for those of you who are in my signals chat. And then if you guys was on this data and Kiki training last week, I want to just do a quick reference to last week. So I shared last week USD Swifts. So the buy level was just a training. I was trying to teach about how to place buy limits, but we was talking about how to place positions and catching the data and Kiki entries on the sale. So if you guys see that history on the USD Swiss, we were able to catch some entries on the sale. So the top one was actually 100 pip drop, and the second one was probably about a 70 pip drop. All right. So currently this is in NAS. I was just kind of playing around with this entry. But as you guys can see, the actual entry is actually right here. There was a break and retest, and I'll break this down a little bit further, but there was an entry. So that wasn't something that was placed this week. That was on, I think, like Friday, or Sunday, something like that. So you guys, I mean, that's a huge drop, right? I mean, anybody would love to catch that drop. It's about a little bit over about 4,500 pip drop. Yeah. So it's up 4,700 pips. How many of y'all would love to catch a drop of 4,700 pips, right? That'll take care of you for the whole month, the whole year. 4,700 pip drop with NAS 100 with the data and Kiki entry. So I'll break that down here soon. But I wanted to know what are some things you guys are good at, or what are some things you would like to improve on? Because tonight I want to go from more of a Q&A standpoint. So is understanding more risk to reward, understanding how to catch your entries, what type of activities you need to do to become a better trader. So many different variations, but once you get them all locked in, it's very, pretty much subconscious. So as you guys are thinking of some questions, I'm going to just share this NAS 100 entry and then review some entries I caught last week. So let's grab this phone. So right here, I'm going to use this entry as a data and Kiki scenario. Okay, let me just come here. All right, cool. So the first thing I'm doing is I'm looking for a candle that broke out. So I'm focused on this candle right here, this area right here. Okay, so let me remove this. So with the data and Kiki analogy, I'm looking for candles that broke out. So this candle right here would be the candle that caught my attention. Once it closed on a 1 hour frame, it officially has my attention. But I'm also going to pay attention to this candle in correlation to the 4 hour in the daily time frame. So the first thing I would check is once the candle has officially closed, after that 1 hour, I'm going to go to the daily and I'm going to look left. So let me put a vertical line on that candle. So give me 1 second. So I'm going to look left. Boom. All right. So this would be my candle, my confirmation candle. That's giving me a reference point. So next thing I do is automatically I go to the daily. So remember, the only structure we had at first was the structure where the blue levels are. These blue levels down here, okay? The horizontal lines. So based off what the horizontal lines are and where the vertical line is, the only information we had at that point was right here inside this box. So in correlation to that box, if I look left, we had a sale here, we had a sale here for the month of September. And if I go left just a little bit more, it's more so what I will call, because you had a reversal here. So it starts to become a more of a tricky level because you're risking. If you wanted to press sell, you're risking. I mean, because it's an index, guys, you can kind of wing it because it gives you more payout as far as terms of pips. But any other time when it's this close to a reversal, that's what we call more of a riskier trade, because you're putting yourself in position to say, if I sell this could possibly turn around and go bullish. But based off of the history after that, price was below, like all of the history before that, price was below those levels. Okay. So it's sold here, sold here, sold here, sold here. And again, you do have some bullish moments. So that one right there would probably be like it's like you kind of gauge how much risk you think it would be. So it's like 60% chance of winning, 70% chance, 50% chance. So it's nothing wrong with taking the position. You just have to be able to weigh the level of risk that it looks like. Okay. So I always tell people it's no right or wrong in trading. It always boils down to, is it worth the risk for you? Right. If it's a higher risk, do you want to take the higher risk? Is it a lower risk? Do you want to take a lower risk? So you begin to gauge and discern what level of risk you want to take on certain positions, depending on how the structure looks, how your confirmations are playing out. So I would have taken it solely because it's in a strong downtrend. And again, we had that previous sale. And because it was all the way, it was at the height of this reversal. If you look left just a little bit here, for the past 2 or 3 weeks, every time it reached a blue level, it kept selling. So it's so I would have took the risk just because of all that sale history. And clearly you guys see the risk there, right? You see the entry, boom. So I was playing around in the demo, and once I saw structure continue to break out, then cool, it is what it is. So, but yeah, so price broke down. So yeah, it's up about 4,500 pips, and it's pretty awesome. You know what I'm saying? So as far as the daily and Kiki analogy goes, when you go to the 1 hour frame, once you confirm it on the daily and 4 hour, and now remember, it's all about what level of risk you're willing to take. So they're going to be it's going to be higher confirmations, stronger confirmations when you understand the analogy more. But at the end of the day, you still have to choose the risk factor. Okay. So there's the confirmations, and then there's a risk factor. It's two totally different things. So the conversation or the analogy goes like this, right? So there's date night here. It's very, very small little date night, but you have this date night, which price dropped and pulled right back to that same date night. So you had this date night, candle broke out, day came back, knocked right on the door, and then dropped. All right. So you probably had some news spike it up and then come back down. All right. And then here's another date if you want, if all the structure you had came up to this green candle. All right. And let me move some blue levels over here. All right. So let's say if you wanted to under this level of support. All right. So you got date night, price broke out. And then remember, I'm referencing this date night into comparison to this whole entire level because the true story started right here. All right. So this is date night. They left the house, knock. All right. Knock and left. Okay. But let's say that you came on the chart and all you had was this candle up. This was the last candle. None of this was created yet. So maybe you want to honor this level of support. Okay. Now, if I'm honoring this level of support, I'm also being mindful that I'm waiting for the candle to break out. So candle broke out. Boom. They left the house. This is date night. All right. AKA consolidation. They left the house, AKA breakout candle. The candle has to close on the 1 hour frame. Then after that, I'm just, after the candle breaks out, I'm just looking to enter the trade. It's really after my confirmations have been met. I already did an analysis on the daily and 4 hour frame. It's a good sweet spot for me. To me, it's about a 60% chance of winning. So I'm going to take the risk, right? Candle broke out. Boom. Caught the sniper entry. So I would have placed a sell. Before this candle even established itself, I already had a sell limit right here waiting at 11,525. All right. So the candle broke out. It's probably hanging out here for a while. Then it finally shoots up 10 minutes later, 15 minutes later, 30 minutes later, whatever. It finally activates the trade. As soon as it activates the trade, boom, it comes right back down. All right. So in that movement alone, you would have caught 100. You would have caught 100 pips. Okay. So, 1,000 pips. So from here, so then this would be the sniper entry, but then there's this other entry that people are thinking about. All right. Which is, that was the date night. If you missed the sniper entry, all right, let's say you missed the sniper entry and I say, hey, y'all, well, let's try to catch a possible retest. Let's catch Day coming back to knock on the door. Well, he knocked on the door here, but then there can be a possible re-entry, right? Right here, this level correlates with the edge of this wick. So this is the support at the body. This is the support at the wick. So let me hide the future so this will make a little bit more sense. All right, I'm gonna come back to this level right quick. Okay, so the initial date night, boom, Day left the house. I'm gonna place a sell limit at the 525. And then boom, that trade would have activated on that far right-hand candle, right? Boom, trade activated right here. All right, but let's say you're looking for a retest, AKA Day coming back to knock on the door or the doorbell. And if you guys are wondering what the door and doorbell is, the door is the neck of the body is what I consider the door. The doorbell is what I consider the edge of the wick. Now, what usually makes this training much more fun is when I'm teaching it, I usually say like Day Day and Kiki on a date night, which is your consolidation. And then so in this case, Day Day when there's a sale, you're looking for Day Day to live the house. You're looking for a breakout on the downside. Okay, Day Day is usually a red candle. So there's a date night. Day Day and Kiki having a good time. And so Day Day tells Kiki, like, girl, baby, I love you. We having a good night. You know what I'm saying? You cooked your butt off. But I got to let you know something. For the past week, your breath been smelling like, dead animals on the side of the street. I don't know what's going on, but I think it's time for a dental appointment. Or I don't know if you got a bad tooth in your mouth, but I can't kiss you today because it's been killing me, right? And so Kiki like, no, you over here telling me my breath stink. Your breath stink, right? He's, I'm just trying to look out for you. Your breath, it ain't been the best, right? So Kiki and her feelings, and she tell Day Day he has to leave the house. So the date is consolidation. Day Day leaving the house is him basically telling Kiki her breath stink, right? So when you see the candle break below, okay, it doesn't have to break below the wick. It has to break below, close below the body, all right? So the body, the support body. So when Day Day closes below that support level, you're looking for an entry, all right? But also you have to ensure that the daily and 4 hour are congruent. You don't take a trade just because Day Day broke out. If you do that, you're going to be placing trades every second because the markets naturally have breakouts. I'm going to say that again. You don't place a trade just because Day Day or Kiki broke out. You place a trade after your entire confirmation list has been met. You check the daily, the 4 hour, your trend. Everything has to be congruent. After you check that congruency, the next thing you want to make sure you ask yourself is, do I want to take that level of risk? Does it look like I'm going to likely win this trade? Is it about a 60% chance? It's like rain, y'all. All right. It's just like rain. Is a 60% chance of rain, 6% chance of winning, 30% chance of winning? Even if it's a 30% chance of winning, you still can take the trade. It's all about honoring your risk management. All right. Does that make sense? It's what people miss. You can still take the trade, but it's about honoring your risk management. Y'all got it? Are you not eating for, are you not waiting for the calendar? Had I answered that question already, Brian?
Yeah, you answered that question for me.
Okay, cool. I can't see the chat when I'm screen sharing on my phone. That's why. Okay, cool. So yeah. But just make sure you guys do that. What I had a lot of times is people, when they hear Day Day and Kiki, if I go and look at structure, guys, you can see Day Day and Kiki every single second. Resistance, breakout counter, resistance, breakout counter, resistance, breakout counter, resistance, breakout counter, resistance, breakout counter. Now, granted, this is 1, 2, 3, 4, 5, 6, 7 entries that can be taken, but it's not just necessarily because you see the candle broken out. You have to confirm it on the top-down analysis. So that's what a lot of people make the mistake. Day Day and Kiki I made up the analogy, but I did not make up the structure. It's not a strategy. It's not indicators. It's literally looking at structure as it is, as the institutional traders and these buyers and sellers are placing trades across the markets and buying up these orders. These orders create structure. So all I found was that because humans are a creature of habit, I was able to identify that they place in the same type of order, same company, same thing over and over again. Now, in the past 2 years, because we're going through this transition of the pandemic, the structure, it still looks the same, but it's not trending as much. Usually when we come around August and September, it's starting to trend a little bit more now. But usually around mid-August, man, these things are tanking or they're just flying up to the sky, just like this beautiful uptrend with NAS, all right? So usually you see that a lot across the board with most pairs, but the economy is recovering around the entire globe. So there's not, the demand is shifting just a little bit different, but at the end of the day, you have to stick to your confirmation. So even though the economy has changed and different things have played a factor, I still stick to my confirmations. I still stick to the same technique, using just basic breaks and retests, because it's the most profitable, it's the most high profit, just not even profitable, but it keeps it so simple. I literally trade. I haven't touched a computer since 2017. All right. So being able to trade just the way I'm teaching you guys on this phone, I literally trade off my phone. I was at the gym the other day and I sent a trade walking on the treadmill. You know what I'm saying? I was at the gym. What was the other day I did? The treadmill. Most of the time I'm sending trades from the bed, car. It doesn't matter, guys. It's literally, once you understand it, it's just basic breaks and retests, and you study it and you don't allow anything to penetrate what you're trying to study, what you're mastering. And you if you get snatched and if you get so obsessed with people's profits and not how consistently they've been trading all that, you're always going to be chasing your tail, right? But if you just eliminate, I tell people all the time, I don't mentor people who are desperate for money. I don't want to deal with anybody that need money. You won't get the skill set if that's your desperation, if that's your necessity. Yes, you want to make money, but gain the skill and money will become a byproduct of the skill set. So when it comes to Data and Kiki, I ain't just taking a trade just because it broke out. I have to make sure that the daily and 4 hour and 1 hour all make sense. If one doesn't make as much sense, then I got to ask myself, is it still worth the risk for me? All right. Terry may say, B, I don't want to take that trade because, last time it came, well, that's a good sell. Well, first of all, it's in a downtrend, right? So it's in a downtrend here. All right. You had a double retest here, had 3 retests here, and the price came down. So even at this space right here, it's starting to be in a downtrend, but she can say, you know what, last time, okay, well, never mind. I would just sell it because all the downtrend. Okay, look right here, right? So price came here and kissed right here. This is the entry I'm looking to make in the future today. But look what happened in July. It came here and came back up, came here and came back up. So she could take that and factor it in. And look at this right here. It's jump. It starts to give you some whipsaw, and price came down. You had to retest on the entry, but then price starts shooting up. So it's kind of like this. I don't know. But hey, she may say, you know what, that's too much of a risk for me. I don't like how it looks because in the past, it did have some bullish momentum to jump in as well. Then I can say, well, listen, I see the bullish momentum, but I like to see that most of the time when the bullish momentum came in, it was starting to turn around the trend. Like everybody's going to have different perspectives and outlooks. And then I can just say, hey, I don't care if it's a 30% risk. I'm going to still take the trade because the level of risk it is doesn't matter. It's honoring your risk management. Please write that down. The level of risk at the end of the day never really matters. It's all about, well, okay, you don't want to be losing back to back, right? But, when you start, if you can maintain that risk to reward and maintain risk management, guys, it changes the game, right? It's such a game changer. So back to this analogy. So we have date night right here, all right? So let me put a box on here. Boom. So let me give y'all let's start from the top. This was the first date night, okay? This was the first date night. Let me hide the future. This is all the date night. It's a very small, quick little date, okay? Because I have some support right here. Boom. Okay. So I have my initial support level. All right. I was waiting for the counter to break out. The counter broke out. As soon as the counter breaks out, I'm like, all right, I'm about to press sell at, so I'm looking for that to happen. I'm looking for it to go back up to the 11.7 level, 572. So boom, press the sell limit. Let's see what happens. Price didn't activate yet. Boom. Price finally activated 1, 2, 3, 4 hours later. So 4 hours later, let's say it's noon. Price activates my trade. Okay. Now it's 12 o'clock. Boom. Now this is what the risk you're running to. From here to here is 572. It's not that many. What's 572? It's about 30, 65. So it's about 100 pip drawdown. Boom, from here to here, 100 pips. Okay. So price shoots back up to the highest level, goes back up to the reversal zone. And then guess what? It finally comes back down. Now, on this counter, it shot up where you had a 100 pip drawdown. Now, I don't know what your stop loss is. And if you ask me what my stop loss is, it's going to vary because I'm considering these things. I'm looking at these things, right? If the bigger my stop loss, the lower my lot size is going to be. The bigger my stop loss, the lower my lot size. Now, how many of y'all would love to take a 10-cent investment to $500? Like, it's pretty awesome, right? Okay. So this is a demo account. This is the account I've been teaching from. Okay. So boom, price retrace 100 pips. If you had 10 cents in, you're negative $10 right now. Not a big deal. Okay. It's not about dollar amounts. It's about percentages. So if you had $1,000 account and you place this trade and you say, well, I'm willing to risk no more than $20, right? Maybe say your risk management is $20. Well, you have to have a 200 pip stop loss for this trade to close out. So you're still in the trade. Okay. So from here to here is 100 pips. Price turns around, drops all the way down here on this next candle. All right. So now you're up about 170 plus 30. So about 100 pips. So now you're in profit about 100 pips. Okay. Next counter comes back up. So anyway, these counters are just bouncing inside our entry zone. It's high as 575 level, 572 level. And then finally, if you just happen to just kind of catch another entry, you're holding it, and guess what? The trade takes off. So let me remove these out the way right quick because we're not teaching from those yet. So Day and Kiki set up. Day leaves the house. I check my 4-hour and daily. I like it. It's about 60% chance for me. I'm willing to take the risk. I got a 200 pip stop loss. And my sell limit is here. Trade activates, puts me in a $10 drawdown or $1,000 drawdown or $10,000 drawdown, whatever it is. Then boom, price draws down, comes back down, puts me right back into profit. I stay right around my profit zone, entry zone. I'm either breaking even or I'm a couple of pips negative, right? And then finally price drops. So as soon as it drops all the way here, okay? So let me put a vertical line on this candle. All right, so that's where I paused at. Now, the next thing that I know for a fact, because I am a Data and Kiki addict, is that there is another setup on this screen already, okay? The next setup is right here, okay? Why? Because I caught the entry up here at the top. That entry already made me money. That entry brought me all the way down here. I'm up, what's that? 72. I'm 130 pips, right? About 130 pips. Boom. I mean, I keep saying 100. It's goodness, I had a brain fart. It's about 1,000 pips, excuse me. So boom, price drops down here. Okay. So then price drops. This is the candle I'm left at. So when I open up the chart again, I can say, oh man, I made money on my top 572 level. All right. So then from there, I know to do what? Day they left the house. The setup is the same. There's another setup. There's another date. Date night happened. As the market was retesting, it was also creating another date. So Day was knocking. But as he's knocking, he's creating new consolidation. Is everybody with me? Yes or no? You got to unmute your line and talk to me. I can't see the chat. Hello. Can y'all hear me?
Yeah, you good. We can hear you.
Okay, cool. So you guys follow me so far? Let me check the chat. Might have people being shy. Let me see. All right, cool. So not sure about a back office, but what do you mean back office? I'm not a part of any company, so I'm not sure what you mean back office. So boom. So you have consolidation here. Remember, this first entry was the retest. When price creates retest, when price is retesting on your initial area, it's also creating consolidation for another entry. So as this was retesting, it was building up consolidation, and price finally broke out of that consolidation. And then there was a sniper entry here. The counter broke out. I have already confirmed the daily and 4-hour. I don't need to do another top-down analysis. It's the same pair. I'm just catching a new entry. Boom. Day they left the house. I'm going to do a sell limit at where? The door. This is my door. This is the support level at the neck of the body. 525. Well, let's say you didn't catch the 525 entry. Okay. All right. Let's say you hope it at least when they come back, you missed this candle entry right here. Okay. I mean, you missed this entry. So the candle's here. So this is what we're left at. I put that vertical line so you can see the last candle I'm speaking from. So Day broke below here. I missed the sniper entry, but maybe he'll come back and retest. Now, in the story, when I talk about retest, I say Day left the house. He got to come back to Kiki and apologize. He got to come back to the date. He got to come back to that 525, 502 area. The 525 is the door. The 502 is the doorbell. The 525 is the door. The 502 is the doorbell. So I'm saying he left the house. All right. That blue vertical line is where Day is standing. He down the street on the phone with his homeboy. Man, I told baby her breath stink. She tripping. All right, I'm just trying to look out for her because I know when she go to work, her coworkers gonna be laughing at her. I don't want nobody laughing at her. Her breath stink. I'd rather tell her breath stink. All right. Then his homeboy says, Day, man, just go back in the house and tell her you sorry, man, and y'all can go to the dentist together. So I'm like, just make it work. You know, you just got to be careful how you say it. You know, you be hurting her feelings. So if Day is down here, guys, and he got to go back to apologize to Kiki, in which direction does he have to go to make that apology? Left, right, down, or up? Okay, well, let me share my screen so I can stay on the screen. All right, y'all can drop it in the chat box. If Day is here, okay, he got to go back up to, I just kind of said it, but anyway, he got to go to the date, all right, and apologize to Kiki. Is he going down some more? Is he going up some more? Is he going to the right or left? Where does he need to go back to that door, to go back to ringing the doorbell? You got 30 seconds to answer.
Need to go back up.
Right, got to go back up. I got some people answering the chat. Perfect, going back up. So the thing is this, most people know what to do, but my goal is to train people to just do it. All right, it's not enough to tell me. You got to say, all right, I'm gonna place a sell limit at the 502 or a sell limit at the 525. All right, so me knowing that this is now indices, I'm gonna do it always at the door. If I do it at the wick, I gotta like lower my lot because I'm putting it higher. The distance from here to here is it's actually saying 25 pips, but I don't know why my calculations feel off when I keep saying this. Anyway, so that is here. He got to go back up. So what you got to do, what you just told me is that from here to here, he's going to make this type of move in the future. If he's going to make that move in the future, he's going to hit 502 or 525, or he may hit both. All you got to do is come here, press sell limit. All right. Okay, with a difference. So 11,525.34. 11,525.34. So that's all I would do. I would just press the sell limit at these levels. 11. And then I'm going about my business. As long as it's with my risk management, I'll calculate my stop loss. All right. And we'll do 11,625. Let's do 700. Let's do 200 bills. 7,567, 725, 11. Boom. All right. So my stop loss is somewhere up north. And then I got my limit orders placed. Look right here on the left side of the screen. I got a limit at the 525. I got a limit at the 504. So let's see what happens next. All right. Did the trade activate yet? Trade activate yet, guys? Yes or no?
I couldn't hear you going in. Are you saying did the candle go back up to?
So you guys told me that you're predicting that prices that data is going to go back and knock on the doorbell. So I placed a sell limit at those two levels, at the door and doorbell, aka the body and the wick. So this is right here is the counter we left on. Like that's all the structure we had, pretend all the structure that we had. As we came back and checked the market, my question for you guys was, did your trades activate yet based off of structure?
Oh, no, not yet.
No, not yet.
Perfect. All right, did it activate yet?
Yes.
Yep.
Perfect. It activated right on top of that wick. Wick entries are my favorite entries, just so you guys know. Okay. So wick, I've learned that structure always hits these wicks more than they hit the neck of the body. Even though the neck of the body is the best entry because it's higher up and it gives you more leverage, gives you more profit, right? So boom, your first trade activates at 1102. You in the bag already. All right. The next candle puts you immediately right into profit. Okay. And then let's see. Okay. You in profit some more. This candle trade activated here on the wick. Price drop down. All right. Let's see what happens next. Dang, that thing tanking. All right, cool. Price dropped down some more. All right. And it never came back. Okay. So what I was about to show y'all was another entry, but you got to be careful. This is another entry. When price started, when your trade activated and it started to sell and it started to pull back, it started pulling back a little bit here. It started creating a new consolidation. There's no set rule for this type of structure because it's things that you kind of catch as you continue to go. But once I started seeing I got a new level of support right here, and the candle could continuously sell, like the next candle could drop or the next candle could came all the way back up to 11,502. I would have been mindful that if I press sell, if that next candle would have broke out and closed below, I got to be also mindful that if I would have execute this trade, I may also want to be in this drawdown from here all the way up to the 11.25 level. All right, because for me, this is still going. This trade was still going. All right, until it broke below this level right here. For me, this trade was still active. Okay, So, yeah, so you got a new level of support. Candle broke out. Now, this candle has now closed below this level of support. So it's showing me some strong orders being placed, right? This candle closed below this level. So again, it's still a possibility it can start right here and go right back up and retest, just like this line did. Okay, just like this pullback. I could have got one more pullback. So I'm being mindful, like whatever position I'm placing, I can't go heavy on my lot yet. Okay. I want a bigger lot, always at the highest level of entry, the best entry. So then price stay right here in my entry zone. Okay. Came sell execution. All right, went right into profit. No, I would have executed after the candle closed. So it came back up. All right, I'm in a bit of a drawdown. I went back in profit, went back in a drawdown. Price is still sitting on my entry point. Got me back in profit on this red candle right here. Okay, price put me back breaking even. And I'm not in profit. I'm not in profit or drawdown. I'm just breaking even. The next candle, boom. All right. So the highest my candle retraced was to the top of this wick right here. So I was in like a 40 pip drawdown, and then price tanked. All right. So as you guys can see, from 11,451 to 10,9, that's about 5,000 pips. Yep. There we go. And counting. All right. So it's just breaks and retests, but it's a certain type of confirmations with those breaks and retests. Okay. And that's pretty much it, guys. It's the same thing over and over again. And the only advice I can give you is to focus on the technique, focus on understanding the markets, get to a space where this is not an income that you need so that you can learn. And that's what has made me most successful, is that I made sure that this wasn't. So now when you first get exposed to trading, of course, you feel like a crackhead, you be on 5,000, like somebody would be going crazy right now. They 10 cents grew to $500, especially if they're brand new, right? But that feeling is always going to have new levels. As the more and more money you make, you're like, hey, now I'm making $500 a trade, making $5,000 a trade, making $50,000 a trade, right? It's going to increase, but at the end of the day, when you're starting and you want to figure out how to become the best for yourself, it's not no competition, it's not no comparison. You got to figure out how to be the best version for you. You got to determine. You got to lock in on your technique, strategy, whatever you want to call it. For me, it's just trading. All right. You got to learn on your skills, lock in on your skill set. Make sure that you're understanding, get them some mentorship, understand why you got it wrong, understand why you got it right, like, et cetera, et cetera. And so from then you can add the emotional intelligence, you can add the risk management, you can add all those things. All right. So focus on the skill set. I'm also building a data and Kiki Academy right now. It's going to take me like 6 more months to build it. Maybe a little more. I really don't know the amount of time because I operate out of excellence. But it's going to be so strategic, and it's going to be very, it's going to be streamlined, like knowing what it's going to be streamlined. So you'll know I need this first before I know that next. All right. So that's going to be coming in the future. But in the meantime, guys, lock in on your technique, then understand that risk to reward. I feel like risk to reward and risk management, once you understand it, it really helps with the emotional side. But of course, if you really want to get that bag, it may be your problem. It may be a challenge that you have to overcome, but that can only be overcome when you change your wealth philosophy. All right, it's parts to this skill set. It's not just making money, okay? But I hope this made sense for you guys tonight. Again, I have a signal chat where this is some signals we caught last week. All the entries, you guys can see the entries are still there. All right, breaks and retests. We really just look at that. You see, it's just, especially right here with this arrows that like literally break, that they knocked on the door and took off. All right. This one right here, the entry was right here at the break. All right. Candle close below. I told everybody to sell where the arrow is, but price retraced right below. Price retraced all the way to the previous high. And then it finally dropped. Okay. We got in gold. Gold did the same thing. Gold tank. We got like 600 pips on gold, and then like a first entry, and then like 200 pips on the second entry for those who held. Okay. So I like to drop before pictures. So it was a buy limit. Price activated on that candle. All right. As you guys can see. All right. There's date night. You got resistance. Okay. Guess what? Kiki left. This is a Kiki version. Kiki left the house, that big green candle. As soon as Kiki left the house, I told everybody to press a buy limit at those blue levels in the future. Boom. Price activated. All right, so this is the activated picture. And then on that same candle, the same candle that activated the trade is now pushing up. It could hit TP1. Okay. And let's just go down here. Here we go. Boom. So the red candle activated trade, and the red one turned, and then the candle after that, so it's nonsense. Boom, it turned around. This trade is up about 60 pips. Okay. Literally breaking retest. But I also made sure my daily and 4-hour were congruent. All right. So if I'm sending signals, those have to be higher profitability. There are trades I may take on my personal account that may be 20% likely to succeed, 30% likely to succeed, but I know how to manage my risk. So I'm not going to send it just to anybody. Right. So I just want this to make sense for you guys. Okay. Here's one that hit the risk. All right. We had the setup. I liked it. I actually came back and got in this trade, got the support. Daddy left the house. Daddy's at the door. I can't remember if news came out, but price turned around and just shot up. Okay. So, hey, whatever. Those are things that's going to happen. Okay. Got another entry on gold. All right. This is where it started from over here. Resistance. Kiki left the house on the green candle. Came back and knocked right here on the dead on the door, and then took off. All right. Then there's another entry right here. Boom. She knocked on the door again. Boom, boom. And let's see what happens. So I always draw out what I predict is going to happen. And this is what happened. Up 300 pips. All right. So this was Friday. Market opened up in the gap. And finally, look how she's just dancing inside the entry zone. And then she got the heck on, right? So 300 pip move. Goodness, that's so far. I'm sorry, that was a nice setup. All right, so I just want you guys to listen. Stay the course. I don't care how many counts you blown. I don't care how stressed out you are. I don't care about none of your feelings. This is so worth it. I'm telling y'all, it is so worth it. Okay. My life has never been the same, will never be the same. And I pray the same for y'all. Okay. I use both. All right. That's a training for another day. All right. That's a training for another day. So I just said wicks are most likely to activate, but I always place, if you look at all those trades, they have interest at both levels. Okay. So, but that's a training for another day, understanding the entry zone. But yeah, guys, that's the training for tonight. I'm about to go enjoy my life. I appreciate y'all timing in on tonight. Please check out YouTube for some old videos. You can kind of get some reference point here. This Monday night call is just a volunteer training call, just something I do out of the kindness of my heart. If you have any questions or concerns, shoot me an email or comment on a YouTube video or DM me on the Daddy and Kiki Instagram page or Telegram, something like that. But Daddy and Kiki Instagram and YouTube be more better. But listen, stay the course. Don't compare how you failed or I don't put this much time in. Like, you got to learn to separate yourself from stuff that doesn't affect your success. Most people allow external things to affect them success. I don't give a flying fish about time. I don't care how many accounts I would have blown. I don't care about how many courses I've taken. I'm going to get this. I'm going to get this skill set because there's enough proof. When God can show you and expose you that there's somebody else out there winning and doing something that you can do, understand that we have the same mind. We're made in the same image. The key to being successful is doing things a certain way. That's the only thing that people miss. It's always doing things a certain way. If you don't know how to master emulating people, you won't have that same level of success. That's the only difference. If I said do this and you did something different, you're not good at emulating. You got to learn how to do things the exact same way. All right. And whoever you follow, whoever you study, not just trading, guys, whatever entity, skill set, profession you want to get into, if you do exactly the same habits, the same books they read, the same stuff they come, you got to become a robot for just that window of time. I ain't telling you to lose yourself. The key is to grow and develop and gain the skills and the knowledge and the patience and things that they have acquired along the way so that you can have that same level of success. And then you can go do what you want to do. All right. But I appreciate y'all chiming in on tonight. Hit me up if you need anything. Daddy and Kiki Academy loading. Outside of that, I got the Daddy and Kiki signals flowing, doing amazing in the chat. I see y'all on the inside. And I pray all nothing but success, abundance, and overflow for you, and keep God first. All right. Y'all have a blessed night. I'll drop the playback either tonight or tomorrow. Look in the Daddy and Kiki Telegram chat. I will drop the playback there. It will be on the YouTube. All right. Y'all take care.